JSE All Share Index fell nearly 1% in early trade, the lowest since September 30th, extending losses for the third straight session. Wayne McCurrie, FNB Wealth Investments Portfolio Manager, joins us now for analysis on the latest market moves. A very good afternoon to you. Thank you for your time. The rand remains volatile against major currencies. Is the rand at 18 rand against the dollar here to stay?
Look, I think it'll stay at this level for about another year. Fair value, surprisingly enough, is still below 16 rand, and I think towards the end of next year we will probably get back to 16 rand, because this is all the dollar and US interest rates and US inflation. When you get a period of rising interest rates, specifically in the USA, coupled with economic slowdown, all emerging market currencies do quite poorly because commodity prices are falling. And in that, the rand is unfortunately a weak currency, but the rand does this every time. So what's happening now is not unusual. It will go to a very weak level, 18, maybe even a little bit more than 18, stay there for a year, year and a half. But then as interest rates start to fall in America and the economy recovers, the rand will recover and probably go back to about 16. But as I said, you might have to wait a year or 18 months for that to happen. So unfortunately, yes, the weak rand is here to stay for a little while longer.
Now, the UK unemployment rate falls to 3.5%, which is the lowest since the year 1974. Talk us through those developments.
Well, look, I mean, this is one of the problems, is that the economies up until now, up until very recently, are actually doing incredibly well, and it's full employment. And when there's full employment, people start asking for extra wages. Then your wage bill starts to rise, and that also contributes to inflation, along with the oil price, along with food prices, along with many, many other things, some COVID-related or not. And the central banks up interest rates to combat that, and that will eventually put an end to full employment and put an end to wage pressure, because as interest rates go up, the economy will start to slow down and oil price will fall, commodity prices will fall, and the unemployment rate will actually go up a little bit, and that will take the wage pressure off. So, once again, we're going through a very normal inflationary cycle. The reason why it feels abnormal to us is we haven't had one for 12 years because of the effects after the global financial crisis in 2008, 2009. Inflation stayed very low for over a decade, but now we're coming back to a normal inflationary cycle, and all of the characteristics we see now, quite frankly, are very normal for this stage of the cycle.
I suppose that's somewhat comforting. But looking at another matter, Data Tech has published a trading statement for the 6 months ending the 31st of August of this year. Help us make sense of those numbers.
Well, look, Data Tech has had some very, very tough times in the not too distant past, but they seem to be getting the act together and coming out with reasonable looking results. I mean, it's still a very volatile company. They have many subsidiaries overseas. They've tried to list some of them, etc. But, with Data Tech, one good set of results certainly has bolstered the company, and we hope that this continues.
So we're also expecting manufacturing data later today. What's your forecasts ahead of that outcome? Will the energy crisis show itself here?
Yes, it's not going to be good. I don't think it will be catastrophic, but it's not going to be good given all the load shedding that we've had. And, of course, we've been increasing interest rates in South Africa. As we all know, same is happening in the world. So, unfortunately, we're going to see not a good set of numbers. Even though this year, despite the load shedding, despite all of that, our forecast is that we'll still grow. The economy will still grow this year, despite, I think it was the second quarter GDP that was negative. We'll still grow, but at a very, very slow rate, unfortunately. But with the load shedding, and especially the excess load shedding we saw, it's not going to be good.
Very well. Thank you so much for your analysis there. Of course, getting some insight on the latest numbers. Wayne McCurrie, FNB Wealth and Investments Portfolio Manager, giving us a breakdown of the very latest in the world of business. We do